Hi there, Mr. Holcomb here with another episode of The Math Behind the Modules. Okay, so this is chapter 11.4, cash flow and budgeting. So the objectives of this lesson are to develop and interpret a cash flow chart, to develop and interpret a frequency budget plan, and to develop and interpret a year-long expense budget plan. All kinds of vocabulary in this chapter section. And for starters, let me just move this over a little. Okay, so the first definition is cash flow. It's your current income and expenses. So cash flow is how much is coming and how much is going out. The money's flowing in, the money flows out. Hopefully it flows in more than it flows out. Cash flow analysis is when you select your goals and you take a closer look at that cash flow. So looking at your cash flow is a cash flow analysis, okay? Prorate means that if you have expenses, and they might be every month, they might not be every month, but they vary month to month. If you take an average of that over a year and set aside the average, so the total amount spent in a month over 12 months divided by 12, that is prorating. So you aren't hit later in the year with a large expense. So it could be like from prior lessons, electric bills in June, July if you use air conditioning. So that's prorate. An envelope accounting system is simply that. The problem with an envelope accounting system in this day and age is we are moving away from cash more and more. But if you are in a cash basis, what that means is you would take your checking account, you take your debit card, you'd go to an ATM and you'd withdraw cash for different categories such as clothing, food, entertainment, and that kind of thing. And you have physical envelopes at home for those categories. And you put money into those envelopes and you have a limited amount, say it's $500 a month for food, you put $500 in the food envelope. And when that envelope is empty, you're done buying food for that month. And that's how an envelope accounting system works. Okay, frequency budget plan. We will do an example 3. The year-long expense budget plan will be example 4, and net worth will be example 5. So we'll get to those when I do those examples. Okay, so net worth will do example 5, but it has to do with assets and liabilities. An asset is what you own. Okay, if you have a car, you own a car, it's an asset. Liabilities are what you owe. If you have a mortgage and you just got the house, your liabilities are the amount you owe in that house. A debt reduction plan is simply that. It's a plan that you put together where you take your income and your expenses and you budget so that you reduce the amount you owe every month. Okay, so your income is greater than your expenses, or you could pay off some debt using cash, and then as your debt decreases, that's a debt reduction plan. And the debt to income ratio being a fraction, you take how much you owe over what your income is, and anything less than 16% is ideal. 15% or less is what you want your debt to income ratio to be. If it's 20% or higher, that's a red flag and you need to address your debt. And those are the things we'll be looking at in this chapter. So here we go. Example 1, it says Dave and Joan want to chart their monthly cash flow. Create a spreadsheet that will help them keep track of their income and expenses for the month. Okay, so this is the data that they gave us on the following page in the textbook, and we will be creating a spreadsheet from this. Okay, so why are we doing this? Well, once we do this, we could actually save this and copy the sheet in the spreadsheet over and have a sheet for each month, and then it's done for us, and then we can just simply change values in those sheets. So this is the data we're going to be entering. So let me just move this out of the way. We're going to go to Google Drive, and I just went to Google Drive and I clicked on create new. So let me just do that. I went to my drive and I clicked new, and I went to Google Sheets and I clicked enter, and that brought me to here. I changed this sheet name to example 1, and I named the spreadsheet chapter 11 for cash flow and budgeting. So now I'm going to enter the data from the sheet in the book. So the first A1 is going to be income. I just type income, and then I click back in there and Control V, and I'm going to make it bold. Right below it is going to be primary employment. So primary employment, and then secondary employment, and finally other income. Okay, and I'm going to go to cell B now, and the primary employment was 5,600. So I'm going to put that as money and no decimal places. Okay, they're all just rounding to the dollar here. And then $500 in secondary employment. And actually, I'm going to drag these cells down like this just to get that dollar with no decimal places in each cell. And then I can change the values. 500, enter, and I'm going to delete this 5,600 because in the book it said other income was blank. Line 5, I'm going to call that total income. Back into that cell. Control B for bold, and I want it right bound. So I want it to the right for my alignment. Okay, and obviously I'm now going to click here and I'm going to fit the data to the spreadsheet just like so. And now my total income, I'm going to click here and I'm going to go over to here, and it's the function formula, the sigma, and I'm going to take the sum of these 3 cells here, B2 to B4, and hit enter, and it is $6,100, and I'm checking, and it matches the book. Okay, next line, we're going to put fixed income, and I want that bold, but I want it left bound, so I'm just hit Control B, oops, escape, Control B, fixed income. All right, so here we go. I'm just going to give the categories first. Rent / mortgage, enter. Car loan payment, educational loan payment, education loan, personal loan payment. Okay, health insurance premium. Life insurance premium. Car insurance premium. And homeowners renters insurance. Obviously, if you were a homeowner, you just put homeowners insurance. If you're a renter, you put renters insurance. I'm just putting both because that's what the book says. And then it says cable TV. And this is total fixed expenses. Okay, they're fixed because they're every month. You have a cable bill every month. You have insurance premiums every month. Loan payments are every month. So those are total fixed. Control B for bold. And I'm going to make that right bound. Okay. And then I'm going to widen that cell so it fits, and now it's starting to look a lot like the book. And now we're going to enter our values. So before I do that, I'm going to assign these cells a dollar value. I just click the dollar sign to format it as currency. And then I put 2,400 in the first one. I don't want any decimal places. So now I'm going to do this again, and I'm going to go left 2, so there's no decimal places. Car loan payment was 200. then 150 for education, 80 for personal loan, 50 for health insurance. Life insurance, they have blank, so I skip it. And then 60 for car, 50 for that. Cable TV they have as blank, and we want this to be the sum of all of these. And it matches the book, so I'm going to continue. They skipped a step space here and they went down to 18, and variable expenses, things that change from month to month. Okay, and I'm going to make that bold, so it's Control B. And then here we go. I'm just going to scroll up now. Now I'm on cell A19, and it's going to be groceries slash, whoops, parentheses, food, dining out, fuel for the car, cell phone, what else? Landline phone. Those have become a thing of the past, but some people still do have them. Let's see, electricity. I lived in a house just a couple of years ago and we didn't have any cell service in the house, so we had to have a landline. There was no cell tower close enough to give us cell service in our home, which was very inconvenient. So there are people who still live in that situation, so landlines are still a thing. All right, so water, sewer, sanitation, medical, entertainment, savings, debt reduction, other, and total variable expenses. Okay, I'm going to make this bold, so Control B, and I want it right bound. Horizontal alignment right. Now I'm going to make all of these cells dollar and go to left on the decimals. Groceries and food, we're looking at $800. Okay, didn't do it because there's nothing in it. So let's go 1, 2, no decimal places. $800 for groceries and food. We're willing to spend 150 dining out, 160 fuel for the car, 120 cell phone, landlines blank, so this person didn't have a landline. Electricity 80, water 30, and it's blank down to entertainment, and the entertainment is $200 entertainment, 300 debt savings, and they want a debt reduction of 160, and the other is blank. Now I want to go to this, the sum of this column all the way down to other, and it comes out to be $2,000, and that matches. Okay, so we're getting close. We're almost done. Now I'm going to scroll back up and I'm just following this, and they're in D6, which is right here, and they call it non-monthly expenses, parentheses, per year. And then we're going to make that bold. And we're going to widen the cell. And then we're going to list things that are not monthly. Medical / dental, related, home related, life insurance. So if you look over here, life insurance premium is blank because it's not monthly, so they must have a premium that might be quarterly or something like that. We'll get to that. Tuition, vacation, gifts, contributions, repairs, taxes, total non-monthly expenses, parentheses, per. Okay, make this bold, Control B. Widen the cell to fit that. Okay, and then we're going to skip down to D20. And we're going to, I'm just going to do this. I'm going to Control C, click here, Control V. And this is going to be not per year, but per month. So then I have to come up here to change it. And I'm going to just highlight year and type month. And then widen my cell to fit that. Okay, and then skip down to 22, D22, and this is total expenses, and then monthly. Control B, Control B. All right, so here we go. Now we're going to put the values in E. So E6, non-monthly is blank, come down, medical dental is 600. And now I'm going to change that to dollars and reduce it so there's no decimal places. And then I'm going to click and drag down like this. So it's all formatted dollars, no cents. And then I'll just enter the values and delete what doesn't go there. So auto related is 700. Home related 500. Life insurance 600 is going to stay the same. Tuition 3,000. 1,200 for vacation. 400 for gifts and contributions per year. 600 repairs, leave that. Taxes are $4,000. And I don't want anything here or here or here. And this is going to be a total, so I'll just click here, and it's the sum of these, and it matches 12,000. Total non-monthly expenses per month is going to be, now this one I'm going to do equals the annual divided by the number of months in a year. So it's E18 divided by 12, hit enter, and it makes it 1,000 automatically. Total expenses is going to equal let's see, it's going to be the total fixed expenses. Here, let's make this bold. Control B, Control B, Control. So I'm making all my totals bold so I can focus on those. So total expenses is going to equal total fixed expenses. So you click there, and so watch up here, B16 plus total variable expenses, so plus B33, and that's going to be plus, and do the monthly per month average and hit enter. And it's $5,990. And the monthly cash flow, well, where does that come from? Okay, so monthly cash flow would come from total income. I need to make that bold, Control B. So you take your income minus your total expenses, and that'll be your cash flow. So I'm going to click here, equals total income minus total expense, enter, and my monthly cash flow is $110. Okay, so there is the spreadsheet created, and I can now shrink this down. So if I hit Control minus, I can do that a couple of times, and now you can see the whole thing. Okay, so Control minus will adjust your spreadsheet to fit the screen, and Control plus will enlarge the cells. So there it is. There is a spreadsheet with monthly and non-monthly expenses with a total cash flow of $110 after all expenses. Okay, so now that we've done, that was example one. And now it says, suppose that the cash flow had been negative $160. What advice might you give Dave and Joan? So let's go back to the spreadsheet. So what they're saying is if this cell here was negative 160, that means they spent more than they made. What could you do? Well, if we look over here, Obviously, we can't get rid of that 160 fuel for the car. That probably gets them to and from work, so we can't do that. What could we get rid of in variable expenses? We could reduce our entertainment. Probably don't want to reduce our savings. You always want to save money. And the other thing that we could reduce is dining out. So if we were at negative 160, we could dine out less and we could have less entertainment. So in reducing those two things, we could get that negative 160 back to 0 or positive. Okay, so that's the answer to the check your understanding. Okay, so example 2, I'm going to use the spreadsheet we just made to make an easier calculation of answering question 2. It says many consumer credit counseling agencies suggest that transportation expenses be no more than 10 to 15% of your budget and savings be at least 5 to 10%. Using Dave and Jones' cash flow analysis to determine whether they're within the guidelines for these two categories. So let's focus on the transportation expense first. Again, remember we want between 10 and 15% of your budget. So we're going to go to the spreadsheet. And I'm going to change the color of my cells that for all the items that correspond to transportation. So car loan payment. So I'm just going to highlight this. Let's make it yellow. Car loan payment, education, personal, health, life, car insurance is transportation. So I'll highlight that. Groceries, dining out, fuel for the car is transportation expense. And over here, there is auto-related repairs of 700. Now that's annually, so be careful when you're doing this. So I'm going to highlight that. And is there anything else? Repairs, auto-related, so home-related. The repairs would not be the auto-related repairs would probably be this, or detailing or something like that. So I think that is about all. Let's see. So here's what you can do. You can go over and you could actually call something auto, and then set this cell to be the sum of this plus this plus this plus this. So that is $1,120. Okay, so we want a monthly average. So I want to average this 700. So what I'm going to do is I'm going to go back into this cell, and auto-related was E8. So I'm going to come up here into the formula, and I'm going to put a parentheses around E8, and I'm going to divide E8 by 12 and add another parentheses there. So now it's the sum of B8, which is car loan. And notice it's highlighted when you click up here. It's really cool. It tells you what cells you're using. And E8 is the 700, but I'm going to divide it by 12. And it's going to do the entire calculation. And when I hit enter, that comes out to be about $478 monthly, which is pretty cool. Okay, so it's done the monthly auto debt average, or the amount that's expended towards transportation. So now what we want to do is we want to take, and I'll call it auto percent. What percent of our monthly income is the auto expense? So I'm going to click here. I'm going to say equals, and I'm going to take auto divided by our income and hit enter. And then I'm going to click in that cell and change it to format it as percent. And that is 7.84%. Now, if I go back to the question, it said that we want to be no more than 10 or 15% for our transportation. They're actually below 10%. So they're doing really well with their auto. Okay, they're only spending just under 8% of their monthly income on their car or transportation. Okay, so that's where a spreadsheet is really nice to calculate these items. Okay, so now let's look at their savings. Their savings is right here. So let me highlight it in green. So their savings is 300. So here I'm just going to do savings percent. And again, I'm going to click here, equals, savings divided by income and hit enter. Click on the cell, format it as percent, and they're only saving 4.92%. Okay, so going back to the question, we want to be at least 5 to 10% savings. So looking at that, it's not quite 5%. So they should probably up their savings a tad, a smidge. Okay, and this spreadsheet can actually help you. So then you can come down here and say, okay, well, what if I save 310 a month? Well, that's 5.08%. So just $10 would get them within the 5%. And if they wanted to really up it, they could say they wanted to save 10%. Well, that's obviously going to be $610 because 6,100, 610 divided by 6,100 is 10%. So if they save $610 a month, that would be 10% savings. Okay. So if I just Control Z that and bring us back to our 300, and there we go. 4.92%. And so that answers this question. Okay. They're below 10% on their auto, and they're not quite at 5% for their savings. So actually the difference they're not spending on transportation should go to our savings. All right, now it says check your understanding. Dave and Joan want to include a section in their cash flow spreadsheet that will calculate the monthly percentage for all transportation expenses. Write the spreadsheet formula that will calculate the transportation percentage for the month. Well, guess what? In answering example 2, I've done that. Monthly percentage for all transportation expenses, write the spreadsheet formula that will calculate that. So now if I go back to my spreadsheet and I click on my auto transportation percentage, what it would be is, it would be B8 plus B13 plus B21 plus E8 divided by 12. And then to get it to percent, you multiply by 100. Okay, so if I did that, if I hit times 100 and hit enter and change this to a percent, whoops, undo. Okay, so remember, percent moves the decimal 2 places to the right. Actually, we only want to multiply we want parentheses around this here. So if I do this and then here put times 100, there's a problem formula is missing. Oh, I need another parentheses. So it's the sum of B8 to here. And I need a, let's see, another parentheses here. So this is the first parentheses that closes that out, and then another parentheses that closes that, and then I need one more parentheses here, and this should do it. Now, let me see. Okay, so I don't want to have the parentheses there. I want to add this like this, and I don't know if this will give me an error or not. No, it didn't. But now it's saying 47,833. So if I get rid of that times 100, let's just leave it at that. So the formula should be B8 plus B13 plus B21 plus E8 divided by 12. And that's the amount. Okay. And it said, write a spreadsheet formula that calculates transportation percentage. So to get percent, you need to divide that by 100, not multiply. So if I divide this now, and if I hit divide by 100 and change this to a percent, okay, I'm just trying to figure this out here, and I'm just going to keep adding zeros, and there's my 4.78%. So it's actually divided by 10,000. Okay, so it's 100% times 100%. All right, so the easier way to do it is to leave it at that and then do a second cell and divide it all by 100. So it's H7 divided by B5. Okay. So there's the formula here. Okay, example 3 says to create a frequency budget plan for Dave and Joan using their cash flow analysis from example 1. And so on the next page in the textbook is the budget plan using the data from Dave and Joan's cash flow analysis. A budget need not to be electronic. Everything a spreadsheet can be programmed to do can also be done by hand or without a calculator. The frequency budget shown can be converted to a template that can be filled in by hand. Okay, so here is the template that we're using from the spreadsheet. So primary employment 2,800, income amount, frequency 24. So they're getting paid twice a month. Okay, bi-monthly, semi-monthly. All right, and annual amount is $67,200. Okay, secondary employment, $500, frequency 12, so they're getting paid $500 a month in a second job, and then the total income is here. So this is all calculated for us. This is a frequency budget plan, and it was given. So where did all this come from? 2,800 and 500. So if I go back to my spreadsheet, primary employment says 5,600. That's monthly. So it was 2,800 times 2 and 500 once. So that's where these are coming from, 2,800. And then frequency 24 times a year, and 500 once in a month is every month would be 12 times, totaling this. And then here is the total. And then the food, what they have done here, if I go to groceries, food, it's $800 a month. So 800 times 52. So if I go back here, 800 times 12. So here's what they did here. Let me just show you. $800 times 12 is their annual food, 9,600. Now, if I divide that by 52 weeks in a year, it gives us $184.61. They rounded to 185. Okay, so that's all they're doing in this sheet is multiplying by the number of months in the year and then dividing by the number of weeks in the year to get these values. Okay, so it's all been done for us. So basically, example 3 is just looking at the following page in the textbook and seeing where these values come from. Okay, so it says frequency budget shown on the next page states that Dave and Joan have an annual surplus of $1,284, and there it is at the very bottom. How does this relate to the monthly positive cash flow that was computed in example 1? Okay, so the cash flow from example 1, if I go back now and look, it's right here. Let me highlight that in red. So there's our monthly cash flow of $110. And if I take $110 times 12, that's going to be $1,320. So this is just a little bit less than that. So the cash flow of $110 per month translates to an annual surplus of approximately $1,284. 110 times 12 is 1,320. So they may have spent a little more one month or the other. So their average was a little less than 110 a month, coming out to be 1,284. Okay, so that's the answer to the frequency budget. Check your understanding. Okay, so here's the answer written out. Cash flow of 110 per month translates to an approximate annual surplus of $1,284 because 110 times 12 is 1,320. Okay, so now example 4 asks us to construct an annual expense budget spreadsheet using Dave and Joan's cash flow data. So I am going to use this information here out of the text, and I'm going to recreate this in the spreadsheet. So it's good practice to do this. So let's go back to this page, and here we go. So what I'm going to do first is I'm going to click on this, and I'm going to just hit add a sheet. And now I'm just going to keep looking back at the book. See if I can find that sheet. There it is. And it's going to start out. Let's see, I'm going to skip one line and I'm going to put after tax, income, categories. And B is going to be income amounts, and C is going to be frequency, and D is going to be annual amount. And just copying from the book, I'm going to highlight these four, and I'm going to make them bold, and then I'm going to click on this corner, and I'm going to spread them out so I can see them all. I'm then going to take these four cells, because it says frequency budget plan in its center, and I'm going to right click, and I'm going to see if it's in here. No, I want to go up here to format and merge cell. So merge all. So that is now one cell. See how there's no lines vertically here. So now when I type in here frequency budget plan, okay, and then I'm going to click on it, Control B for bold, and then I'm going to click here and go to center. So now it is centered above this next line. So it looks just like the book. So then we say primary employment. Secondary. Interest. Dividends. Other income. And total income. I'm going to click on total income and make it bold, just like the book shows. And then I'm going to make these cells from B3 to D8 dollars. So then when I type a dollar amount, I have a dollar sign, but I don't want, then after I put a dollar amount in, I can get rid of the decimal places. So 2,800 goes here. This one was 500. Frequency is 24. And the frequency on this one is 12. Now I'm not going to just type in this amount, because if things change, you only have to change one cell. So now if I click here and hit the equal sign and take this times this, and then I just noticed I made the frequency a dollar, and I don't want it dollar. Okay, I just want it number with no decimal places. Okay, so the frequency, and I've noticed in the book that they've centered all their cells here. So I'm going to center all these like so. I'm just trying to get it to look just like the book. So the interest, dividends, and other income is blank. And now total income. So now now that I've taken this and it's B3 plus C3 gives us this, I can drag that rule down one. And it took 500 times 12 automatically and made it 600. Now total income, I can say equals, and it's saying sum D3 to D7, it's suggesting that, and that's what I want. So I hit enter, and I got 73,200, and that's what the book says. So now if I had gotten a raise in my second employment job, say I got a $50 a month raise. Now if that changes to 550, it's going to automatically change this amount and my total. And that's what's nice about spreadsheets. You change one thing, and as long as there's a function connected to that, everything changes. Okay, so let me change that all back. Okay, so there we go. All right, let's continue. Now we're going to skip line 9, and I'm going to go to line 10, and it's going to be weekly expenses. Expense amounts. And that's all I have in those two. So I'm going to make those bold, Control B, and I need to spread this out a little bit so that it doesn't overlap. And they have this one centered, and this one's to the left. And now we're going to list them. So it's food, personal transportation, public transportation, household, here, dining out, and entertainment, other. Okay. expense amount, I want to be dollars. And then I'll put the first one in. For some reason, it doesn't let me change decimals if there aren't any on any of them. And then I'm going to highlight those again. I'm going to arrow left too. So I want those to be no dollars, rounded to the dollar. And I want these centered. So it looks like the books list. So there it is, 185. This one's 37. Nothing under public transportation, nothing under household, nothing under childcare. But when we get down to dining out, they spent 35 and entertainment 46. Okay, and then we're going to just put 52 here, 52 here. And once you do two and they're the same, it will copy. And then I want them centered. And I want that dragged down to other. Okay, so there it is, looking just like the book. And now what they're going to do is take this column, and it's going to be the product of B2 times C2. So this is going to be equals this times this, enter. And it says suggest autofill, and we'll say yes, we want that. So we're going to click that. And the book has it to the right, just like we have it here. So I'll leave that like that, and the numbers match. And then total weekly expense comes right under other. Okay, expenses, I forgot the S. So when I do that, I've got to come up to this to change that. Okay, so expenses and control V. So this is going to be the sum of these cells, and it matches the book. Okay. All right. Now, monthly expenses are next. We did weekly, now it's monthly. I'm looking at this mortgage, utilities, land, car loan, and what does the last cell say? It's different. Groceries, dining out, fuel, rent, mortgage, utilities. So it's different. I was going to see if I could copy something, but it doesn't look like I can. So here we go. Mortgage, utilities, landline slash cellular, car loan, education, personal loan, car insurance, homeowners insurance, savings, debt reduction. Okay, other, and total monthly expenses. I want monthly expenses, bold, control B. I want total monthly expenses, bold, control B. Okay, so now I'm going to put the amounts in, starting with mortgage. I'm going to put 2,400 in for starters. Then I'm going to click on it and make it a dollar sign, and then arrow left so there's no decimal places. I'm going to drag this down, even though it's going to put that amount multiple times, and I'll just go in and change it. I just formatted the cell to be dollars without decimals. So now it's 110, 120, 200, 150, 80, 60, 50, 300, 160, and $50. And then this one I'm going to say equals, and it's already thinking I want to take the sum of all of those. It's making a suggestion. I want that B22 through B32, the sum, and I hit enter, and it's $3,680. Okay, actually I didn't want to do that, so I'll control Z. And then we want to do, because this is monthly expenses, not just 1 month. So monthly being 12. So I'm going to put 12. Now watch what I mean by this. If I just put 12 and then I click and drag down like this, oh, it did copy it just 12. I thought it would go 12, 13, 14. It didn't. Okay, so that's good. 12, 12, 12, 12, 12. I want those centered. So it's alignment center. And then we're going to take, this is going to equal and see how it's doing the product B22, C22. I hit enter. And then when I click on here, I can just drag that rule down and it does all of my calculations for me. So it's even quicker than a calculator. And then this is going to be the sum of all of those. I hit enter and it's $44,160 and it matches the book. And it's just really nice and quick when we do these calculations. Because if I was using a calculator doing this by hand, I'd have to multiply all of these by 12 individually. This did it all at once. Okay, so now we're going to do to the other frequency expenses. So I'm going to skip a space, put one here, and other frequency expenses. So things that didn't happen monthly or weekly. Okay, and I'm going to make that bold. So Control B, enter. And the first one is medical down. And then auto-related, home, life insurance, tuition, vacation, gifts, contributions, repairs, taxes, other. I'm just going to keep going. Total, other, frequency expenses, total expenses, and annual surplus or deficit. Okay, I want these last three to be bold. Expenses is sticking out over, so I'm going to go up between A and B and double click it, make it wide enough for that. Okay, and now I'm going to enter my data. So the first one is 600. It's a dollar amount, so I'm going to go up, change it to dollars, arrow over 2 so there's no pennies, and drag down to other. Now I'm going to enter what we have here: 700, 250, 150, 1500, 1200, 200, 400, 600. Repairs is 600. Did I make a mistake somewhere? Medical, dental 600, auto 7, home related 250, life 150, tuition 1500, vacation 1200, gifts 200, contributions 400, repairs 600, taxes 2000. And other expenses is blank, so I'm going to delete that. And then total other frequency expenses. So then I want my frequency over here. So it's 1, 1, 2, 4, 2, 1, 2, 1, 1, 2. Okay, so what does that mean? Medical dental once a year, $600. Auto related, total of 700 for the year. Home related, 250 twice a year, totaling 500, and so on. Life insurance is quarterly, so every 3 months they're paying 150. So now we're going to do the amount. So that's going to equal, give it a second, and it says, okay, do you want to multiply B36 times C36? And they're highlighting it. Do I want to multiply 600 times 1? And the answer is yes. So I hit enter. And then I drag that rule all the way down to here, and it matches my spreadsheet. So now total other frequency expenses is going to equal the sum of what's highlighted here. Now it shows this here, but it doesn't matter. There's nothing there. So I'm just going to hit enter. And it is correct, but it's not formatted in dollars. So I'm going to dollar it, and I'm going to get rid of the pennies. Okay. Total expenses are going to be the monthly expenses plus these. Is that right? 44. We want to do all of the expenses. So we're going to go to total expenses equals, and I'm going to come up here and click the total weekly expenses plus total monthly expenses plus total other frequency expenses, and hit enter. And I get $71,916, which matches the book. And the annual surplus or deficit is going to equal how much we made minus how much we spent. So it's going to equal total income minus total expenses. And I get a surplus, and I'll make that green because it's positive. A surplus of $1,284 on the year. Okay, so we've entered all that data, and now we have a spreadsheet for our budget plan. And if I hit Control minus, it makes it pretty small, but now I can see the whole thing. On my screen, I got a large monitor, so I can see this just fine. You might not be able to see if you're watching this video on a smaller monitor or on a phone. So I will undo that, and I'll go back up here to reset and put it back to 100%. Okay, so now let's go back to our thing here, and it says construct an annual expense budget sheet. So that was example 4, what I just did. And now it says use the spreadsheet in example 4 to create row 43 in which the totals of each month will be calculated. To create row 43, so I'm going to go back here and all the way down at the bottom, row 43, contributions is on that. So let's see what it says. What formula will be used for January? Which entries will appear for each of the months in the row if the same formula is applied to the remaining months? Okay. Okay, so to answer this, they're actually showing the next page in the text, which is showing the income. And I'll show you what that looks like. Okay, so what they have done is they've taken the annual, like for primary employment, they took the total and divided it by 12. They took the secondary employment and divided it by 12. They took the total income and divided it by 12, and they created categories of everything we've just done monthly. So I'm going to enter this into the computer spreadsheet, and we'll continue from there. So all I'm doing is entering this in, and then the check your understanding is saying to add a column or a row 43 and do totals. So that's what we're going to do now. Okay, so let me go here and A1, I'll try to speed this up a little. Income, Control B, okay, employment. Secondary, other, and total. That's the E, put it back, and Control B for bold, and I'll widen it as I go. Under total income, they skipped a space for 6, and they got down to 7, and this is fixed expenses. All right, back up, Control B, and rent, mortgage, car loan payments. And now watch what I'm going to do. Again, I think they're the same, maybe not. Educational loan payment. Okay, so what they're doing is they're taking these categories here under fixed expenses. So I'm going back to my example 1-2 spreadsheet, and I'm going to save some time here. Car loan, educational, personal loan payment, health, life, car, homeowners, cable TV. Okay, and I'm going to right click on that and copy. And then I'm going to go to example 4 and click in this cell and hit Control V. And then it's going to plop all those in here. I didn't have to type them. But after cable TV, they have life insurance, tuition, and taxes. Okay, I don't want premium. Tuition and taxes. Skip a space, variable expenses. Oops, I want that. Now I wanted this down when I wanted to skip a space. So rather than delete it or cut and paste, I can just take my cursor and move it over so it's a hand, grab it so the hand closes and pull it down one and let go. And that moves it down one cell. And then we want groceries, food, dining out. So then I go here, groceries, food, dining out, fuel, car, cell phone, landline phone, electricity, water, sewer, sanitation, medical, dental. So from here all the way down to medical is the same. So I'm going to copy. For example 4, I'm going to hit Control V. Okay, and then under medical, they have medical, dental, auto related. So I'm going to look for that. Medical, dental, auto related, home related, vacation, gifts. Okay, so I don't want life insurance or tuition, but I want vacation, gifts, contributions, repairs. Let's just copy that because then it changes. I'm going to show you just how to save time typing. Whoops, I didn't want to install that. I just want to hit Control V. So they have medical, dental, auto related, home related, vacation, gifts. So it goes from vacation or home related to vacation. So I don't want these two, life insurance or tuition, in here because they're already up here, right here. So I'm going to right click and delete those 2 rows. So it goes home related, vacation, gifts, contributions, repairs. Then there's entertainment, savings. So I can just type these in rather than go looking for them. Okay, so this matches and I'm on row 42, which is what I should be. And now we're going to enter all of our data. So in B, I want January. And C, I want February. And they're just using abbreviations. So I'm going to drag that out to M. And that should be December. And I'm going to center that. I also want them bold. So I should have just kept those highlighted and hit Control V. All right, so here we go. So I'm just following the spreadsheet, 5,600. And this is all dollars. So I can actually make this whole spreadsheet all at once, all the way out to M, dollars, no decimal places. Okay. This is now going to get dragged over and notice it's the same. So it never changes, 5,600. This one's 500. Drag it out. Other income is blank. Total income is going to equal this plus this plus this. Actually, I don't want to do it that way. Escape. I'm going to use the sum symbol and drag down these 3, enter, and then I take that rule and drag it over. Okay, and then we're down here to rent mortgage. We're paying $2,400 a month in rent. Okay, and notice it's already dollars, no pennies. Scroll all the way over to here. Car loan payment is $200 a month. And drag. Education, $150 a month. Every month. These are all fixed, so it's going to be every single month. Personal loan payment of $80 a month. Okay, and health insurance. Let's see, health insurance 50. Nothing for cable TV in March. We have life insurance premium, car insurance premium. Okay, I'm not done yet. 80, 50. This is 60. Life insurance premium is not monthly. That's why it's blank there. Homeowners insurance is 50 a month. Cable TV is blank. Life insurance is 150 quarterly starting in March. So I'm just going to add those in and then go 3 months, 150, go 3 months, 150, and go 3 months, 150. Okay, tuition is $1,500 on the January, and again in July, or is it June? August, actually, January and August. Okay, taxes are February to $2,000. And again in September. Variable expenses. Groceries, 800. Now these all copy, so watch what I'm going to do here. 50, 160, 120. Skip, 80, 30. Those are all going to copy down. So I'm going to go like this. I'm going to drag all the way over to December so they all copy at once, just to save some time. And electricity, actually this doesn't line up properly. So where am I? 21. Oh, I'm off by 1. All right, so I've got it under variable expenses and I want that control B, and that way that would not have happened. So all I'm going to do is choose this and use my hand and move it down 1. So water's 30, electricity's 80. Now they all line up properly. Okay, medical dental, $600 in December. Medical dental, 600 in December's M. That goes here. Auto related, 700 in October, 700 October. And home related, 250 in April. And 250 in August. Vacation, 1,200 in July. Where's July? H. Okay. Gifts, 200 in February. And 200 in November. Contributions, 400 in May. Making sure I'm in the right cell. And repairs, 600 in October. December, November, October. Repairs, 600. Now entertainment is a constant, 200 a month. Savings, 300. Debt reduction, 160. All three of these repeat the whole year. And there is our spreadsheet created from that page out of the text. So now I can answer this. Use spreadsheet in example 4 to create a row 43 in which totals for each month will be calculated. What formula would be used for January? Which entries will appear for each of the months in this row if the same formula is applied to the remaining months? Okay, so I'm going to go back here and I'm going to put totals. I'll just call it totals. And Control B. Okay, so for this one, I want the total of everything in column B. So I'm going to go up to the sum. And I'm going to scroll up. I'm going to click here and drag down all of these until I get down to my totals line, and make sure you're one above and the other. And then I hit enter and I got $18,690. So it's B8 through B42. So what did I just do? Oh, I added my income as expenses. So I really only wanted to start at B8. So when I made a mistake doing that, I can now just go up here and get rid of that 2 and call it B6 to B42. And if I scroll up, you'll see that it's highlighted. And actually, I want it started at B7 or 8. Okay, so if I go B8 to B42, that is my first expense right here, $2,400 for rent or mortgage. And it's the sum of all of these expenses. And now when I hit enter, it's $6,490. So the formula is sum of the quantities from B8 all the way through B42. So that's the answer to this check your understanding. And then it said, which entries will appear for each of the months in this row if the same formula is applied. So all they're saying is if you take this formula and drag it all the way over to December, these dollar amounts here are the answers to this question: January, February, March, April, May, June, July, August, September, October, November, and December. So those are the answers to the check your understanding. Okay, example 5 says that Liam Brown is single, in his mid-20s, and owns a condo in a big city. He has calculated the following assets and liabilities. So his current value of his condominium is $580,000. Current value for his car listed in Kelley Blue Book is $17,000. His checking account balance is $980. He has $22,500 in savings, $24,800 in retirement. He has a computer worth $2,900. He's got a nice bass guitar for $6,700. And he has stocks and bonds totaling $18,300. Those are all of his assets. His liabilities are the remaining balance on his home or mortgage, $380,000. Okay. For starters, Liam is in his mid-20s. How did he pay down his mortgage? $200,000. That's my first question. But let's continue. Remaining balance on a student loan is 51 grand. He has credit card debt of $1,600. It says to calculate Liam's net worth. Last year at this time, he calculated his net worth at $205,780. Compare both values. What do the changes mean? Okay, so the first thing to solve this problem or to calculate this is to total the assets, total the liabilities, and take the difference. So I put this into a spreadsheet. When I put it in the spreadsheet, we've been working. And just to save time, I created a new sheet, called it example 5. And I abbreviated the names that they had in the book. So condo value. So here are all the values that were given. So here I would put total assets. Okay, and I'd make that bold. And then this would be the sum of B2 through B9. So his total assets are $673,180. And then I do total liabilities. Okay. Make it bold and do the sum of these three. Okay, so total assets 673,000, total liabilities is 432,600. So we want to find the difference. So I put current net worth, that bold, Control D, and then this is going to equal assets minus liabilities, and it comes out to be $240,580. Okay, so this calculated it all for us just like that. And then if I go back to the question, so we calculated his net worth, and last year at this time he had 205,780. So I could put this over here. I could put last year's net worth, make that bold, widen this, type in the amount they gave us, which is 205,780. Make that dollars and no pennies. And then I could take the difference over here and say difference. Just call it difference. And Control B for bold. And then this would equal this minus this. So what we could say is this year, his net worth is 34,800 more than last year's net worth. How did that happen? He paid down some of his liabilities and his assets therefore increased. So as your liabilities decrease, your assets will increase. You pay down the condo, the liability decreases, but the condo value might stay the same. So even though the condo value stays the same, it actually could go up So all depending on different circumstances in every category. But if liabilities decrease, you pay them down, your assets will be greater, the difference will be greater. Okay, so that's the answer to the check your understanding. Okay, so now it says, what can Liam do to continue his improving net worth trend? Okay, so at this point, let's see. Okay, putting more into savings can improve his net worth, and paying down his debt can also improve net worth. Okay, example 6. Tom's monthly liabilities and assets are shown in the table below. Find his debt to income ratio, express that ratio as a percent. So since I've been doing these in a spreadsheet, why don't we just keep doing that in a spreadsheet? So I'm going to enter this in. It doesn't take very long. So right here, I'm going to type in monthly liabilities, parentheses, debt. And then I'm going to skip a space and monthly pre-tax assets income. Okay, I'm going to format these cells and I'm going to merge them. I'm going to format these two cells and I'm going to merge them. Control B, Control B, and I'm going to center align both of them. And I'm going to click here and I will get them to fit. And so now I have those and I have two columns here underneath. And right here is going to be mortgage payment. I'm just copying what's in the book. The more you do this, the easier it gets. Mortgage payment, student loan payment, minimum, credit card payment. Don't ever just pay the minimum. You'll be paying forever and interest will soar. And you should always pay the most you can. And car loan payment. Okay, so I'm going to widen this column like so, and the amounts are 2,300, 750, 200, and 150. Highlight them all together, change them to dollars with no pennies, and there we go. Okay, and then over here, gross salary, stock dividends, and interest. OS, interest. The amounts are 7,800, 380, and these and make them dollars, no cents. And now I've just copied what is in the book. So we want to find total assets and total liabilities. Okay. So here I put total liabilities. And total assets. Control B. Control B, this is going to be the sum of B2 through B5, and this is going to be the sum of D2 through D4. All right, so we got a total assets of $8,300, a total liability of $3,400, and debt to income is debt divided by tax. So I'm going to now skip this space. I'm going to say debt to income, make it bold, Control B. And then right here, I'm going to give it a formula. So I'm going to say equals. And debt to income is debt divided by income. So it's going to equal the sum of the debt divided by the total assets. And hit enter. And then I click in that cell and change it to a percent. And I'm going to, I'll just leave it like that. So the debt to income ratio is 40.96%. Okay, so Tom's debt to income ratio is very high. Remember in the beginning of this chapter, they said we should keep our debt to income ratio below 20%. Okay, so there is the answer to example 6. Now check your understanding. It says Tom anticipates that next year his car and student loans will have been paid off and he will have received a 10% salary increase. If everything else remains the same, calculate his debt to income ratio. So what's really cool about this is you've already created a spreadsheet if you follow me. And so we're just going to make those changes and this will automatically change because it's a calculation. So his 10% salary increase, well, this is going to be 7,800 plus 10%. So I'm going to multiply that by 110%. So I'm going to change this to an equal sign. And it's going to be 7,800 times 1.1, which is 110%. And I hit enter. And now his new salary is 8,580, and it dropped his debt to income to 37%, but also that his student loan has been paid off, I believe is what it said. So the student loan payment is now going to go to 0. And I'm going to hit enter again. And now it says that his debt to income is 29,190. So is that correct? So let's see. 10% salary increase. I'm just going to do this off to the side. It was 7,800 if I remember. Yeah, 7,800. That's I'm going to do equals this times 0.1. Whoops, I hit something I didn't want to hit. Times 0.1, and this is going to equal this plus this enter. So that's right, 8,580. Okay, stock dividends didn't change, interest didn't change, mortgage payment didn't change, student loan payments now 0, credit card didn't change, total loan, car loan did not change. So I'm getting debt to income to be 29.19% now. The book says something differently for some reason. Let's see, his car and student loans will have been paid off. I did not do the car loan payment. So if his car is paid off too, then I want a 0 here. And now it comes out to what the book says, 27.53%. So if you do a spreadsheet, just doing these simple calculations in here will give you the answer you're looking for. Okay, so that is the answer to check your understanding 6, and that is the end of chapter 11.4. And thanks for watching. Have a great day.